Chris Frostad. How are you, sir?
Good morning. Good, thank you, sir.
I'm glad to have you here with me today because it's a Canadian holiday. You should be with your family and doing useful things, but here we are spreading uranium joy everywhere. Right, Chris, we're going to get on with it because I don't want to take up too much of your time today. Last few sessions, brilliant, some good feedback, and the usual bit of trolling. Why not? It's such fun to hear all opinions. But one of the questions that did come back was around NPV and market cap. So we're going to talk about that initially. Then we're going to get into talking about maybe how and where you deploy your exploration budget, if you have one, for investing into your portfolio. And then the third area is going to be, we're going to talk about India. You've got some actual relevant experience in the Indian nuclear uranium space. So that's going to be a fun thing. And then I think we better finish off with, and we can't not, with regards to Kazatomprom's announcement. And because I think it possibly wasn't what everyone wanted to hear or were expecting to hear. But so, does that make sense to you? Should we do that?
You almost start with that one. That was...
Should we start with that one?
Surprised everybody.
What did you make of the news?
Probably a big nothing at the end of the day, because I mean it's every few months Kazatomprom comes out with a startling change in their production numbers, and the spot price twitters a bit, and the world goes on. And plus, again, all of that stuff's heading east anyway, so it doesn't solve the problems for most of North America and South America and beyond.
Right, a nothing burger for you.
I think so.
Nothing,
It's
burger.
It's interesting to keep track of all this stuff and where it's all coming from. We're still so short. Those kind of announcements are looking at more of a short-term situation. We were still looking at an $85 uranium price ish. Long-term prices are obviously are higher than that, but it's still short of where the world seems to think it needs to be before we're going to start producing enough uranium to match up to demand. So these are little blips along the way, I think.
I think they're just interesting stories along the way too, because my big takeaway from it is, like, yet again, I think there's two audiences here. There's the market, the public market, and then there's industry. And I think yet again, another wonderful example of the market either wanting something to be true and not understanding how the industry works. And I think, like most of the people I spoke to, most of the experts I spoke to, most of the commentators I spoke to, not most, all called that wrong, right? They, to a man, to a woman, called that wrong. Just shows you how kind of opaque the market is in terms of that information kind of flowing through to, I guess, investors hoping to make, smart investment decisions. This could have been the catalyst to get things going. It wasn't, but on we go. Right.
Well, when you're looking at a Cameco or a Kazakhstan that is providing most of the uranium anyways, you've only got two sources of information. I mean, you're right. I mean, the analysts and the experts are really running with nominal information to make these calls, although they seem to.
But for 5 years, though, for 5 years, Chris, it's been like this for 5 years. Don't get me wrong, I've really enjoyed it. It's fantastic. So listening to people's thoughts of, how the world works. And, I'm going to come back to the fact that the thesis is absolutely spot on, but has had to be aided and abetted by things like Sprott coming out, mopping up mobile inventory. Yeah. It's had to come about by COVID, affecting people like Cameco and Kazatomprom's ability to produce, and projects going to care and maintenance as a result. If it wasn't for those things, I don't know how long we would have been waiting. So I suspect if we go back and look at the 2019 estimations, we'd have been, without those factors, been way, way off of brief. Mm-hmm. So it's a kind of salutary lesson in terms of understanding actual market drivers, not what we hope will happen. So I think we kind of got lucky. Right. Don't get me wrong, made a bit of money. It's all good. Yep. But boy, it told me, it made me think, Christ, I was pretty dumb. I think where else could I have allocated that money? what else could I have made? But there we go. Right. So love everyone's opinion as to what happens. I see Mr. Quakes has put a fantastic sort of reality check type conversation about the impact of that, and it may be a nothing burger, and maybe all of that is going to be heading east anyway, so it doesn't matter, and the West is still not producing enough. So I guess that's the good news for all of this. What does that do for spot price? I don't know. I'd be interested to see what happens. There's an initial $4 reaction to that, but that's still in the mid 80s, right? So what next? In fact, what is next? What do you think is next? What's the next catalyst?
Catalyst to things moving forward?
Yeah.
I think there really hasn't been enough activity in the long-term contracting. Like we had that's been visible, right?
Yeah. Is it ever?
I think there's got to be a jump coming there somewhere. It's been easing up, but I think we've got to start getting some more visibility there, and that'll be more that there's a lot of stuff going on the production side and who's producing how much and this, that, the other thing. But I think we're going to start seeing sooner than later a lot of these things starting to come online that we've only been talking about for the last few years, and we'll start seeing some real numbers in the long term.
I hope so.
Price.
I hope so. Visibility is a great word, but it's never been visible. And the difficulty is when you've kind of got a public company interacting with a private company. Private company goes, well, we don't want the terms of this deal in the open. And quite often, even if they're public companies, they say, oh, you don't want the exact terms of this deal out in the public either. So, the utilities are quite secretive. These buyers are quite secretive. So I think it's going to be a hard one to actually call and actually understand how many of these term contracts are out there. And at what price?
Well, again, it's going to be, I think it's a while before we start seeing another mine getting turned on. I mean, we keep talking about it, but it's not months. I mean, it's still years. So this market's just got to keep getting tighter and tighter and tighter. And whether it's a catalyst, something that pops, I think we've seen a lot of those happen, and that's about it. I think we're just going to see this squeeze until prices just have to be the more visible prices. We're going to start seeing some activity in. But it'll be after the fact.
Yeah. Well, there's a whole big discussion there, in which we don't have enough time for today, because I do want to get onto those other three things. And I'd love people to kind of send in their thoughts and ideas, questions around that specific topic, which is like, how do you call this? And I want some honest, appraisal of the situation. I think, because if we're honest, I'm not sure too many people have been paying too much attention to the detail or the fundamentals, other than the basic general thesis is the demand is there and we're not delivering into that. But where and when do you think those catalysts are coming through, folks? So that's over to you guys. Right, let's go back to a question which someone sent in off the back of something we talked about last week, which is basically, if a company's market cap is less than the net present value, NPV, are those companies undervalued? Chris, over to you.
Well, it's just to anybody who does watch and follow and understand the resource industry and sector in general, it kind of seems like a bit of an odd question, because they're a simple question. Yeah. But in fact, I've been asked about it more times than not. Like what's up with that? And it's typically from investors and people, and not stupid people by any means, who are trying to reconcile what we do in mining with what we do in real business, in other businesses. What's your profit? What's your margin? What's your operating? What's your growth strategy? How do you grow? And the problem in mining is that it's typically, we're not talking about a growing business. We're talking about a project with a start and an end. I mean, in the grand scheme of things. And so it's very different, and it just doesn't make intuitive sense out of the gate that if I'm sitting on an asset that's has a net present value of $400 million, how can I possibly have a market cap of $25 million? Like, that just doesn't make sense if those numbers are true. And I guess the answer is, of course, is that when you're looking at a feasibility study or a PEA or what have you, that's providing that number, it's at a point in time, and it hasn't been de-risked necessarily. Like now it has a ways to go. And I think, one of the things we saw happen in the last week was NextGen announced that their CapEx, the money required to build this thing, their estimates had jumped by about 70%. And it negatively impacted their share price, et cetera. But, the last feasibility study that came out of NextGen was in 2021, and they had a market cap, it had an NPV of a little over $3.5 billion. But if you looked at it closely, it was also based on a uranium price of $50. And these things move. Obviously, they move. It's a point in time. And so since that point in time, the price of uranium's gone up 70%. Now we've seen their costs going up 70%, but other things change as well. So from the time those things are created, those documents that give you that value, that NPV, there's other aspects now that have to get me from here to there. How does a $25 million company put together the $300 million it's going to take to build this thing? How do I get my permits? Do I get my permits? Do I ever get my permits? Do I, when is the metallurgy truly right? What is the rock? Is it full of arsenic? And I didn't know that before. So there's so many things that have to happen from the time I've got this study that is a tome. I mean, the detail in some of these things is astounding, to actually turning on the button and starting a mine. So that whole aspect and range of risks that have to be eliminated, are what discount the value of that NPV or that NPV into your market cap. Yeah,
absolutely. And it sounds like seemingly an innocent question, but you need to think about it in terms of risk. And I was when we sort of on the app, I talk about could, should, and will. Right. So if you go through the economic study, I'm just trying to keep it simple here, folks. PEA, what the project could look like. PFS, what the project should look like, and DFS, what it will look like, right? As we've just found recently, and is that even with DFSs, definitive feasibility studies or bankable feasibility studies, it is no sure thing. And an oft quoted line by me is, when I've gone into guys who built mines before, and they're sitting looking at a BFS, a bankable feasibility study. One chap said to me, "Look, I've built 5 mines. I funded 5 mines, and currently I'm looking at 30 bankable feasibility studies. I think 5 of them are probably reasonable. The rest are fantasy." Right? So that's someone's gone through a massive long process over years to create a document which will get them the funding that they need to cover the kind of capex and for the project. Go to a bank and say, "Give me some debt," and go to some equity providers, private equity, industry, whatever. Say, "Give me the equity to build this thing based on this document." 5 out of 30, as far as this guy said, were actually reasonable. That had a chance of actually succeeding economically. So the numbers that are put together for these companies, so when someone's talking about it, in that scenario as described, where you go, is the question was, is if the market cap is less than NPV, are they undervalued? I think the answer is no. And sometimes the market is very good at assessing risk in a way that the company wouldn't want. Okay, so the company has commissioned the reports. The company is paying the consultants. The consultants are incentivized to write the reports how the company wants them to. Let's remember that. Okay, and as a consequence, they're going to be a little bit gentler. Like we do a series called Analyst Notes, and we assess these economic studies, and we see big holes in these things all the time from some good companies and some horrific companies. I mean, I don't know if you agree with that. I mean, in terms of that incentive,
well, no, it is, because I don't know how many times I've talked to, we've been looking at a project or what have you, and that engineer or that geologist or whoever is reviewing the feasibility study that exists, and inevitably half the time they'll walk away going, "Well, that was a dumb way to go at it," or "That wasn't going." Like it's all opinion at the end of the day. But everybody's got a different opinion, so it does become, just because it's in the document doesn't make it the Bible.
True.
But you know what's also difficult is that a lot of investors, and particularly as we're moving, as DIY investors and people who are doing all their own trading, stock picking, if you will, they don't have access to a lot of the analysts and the real information. Who the people who are watching this stuff like a hawk. I mean, I've got if we're looking at next gen. The folks, the analysts at TD or whoever is following them, they're recalculating those numbers on an ongoing basis, right? And they're letting people know that although in 2021 this thing had an MPV of $3.5 billion, by our calculation now with the price of uranium and this, that, and the other thing, we think it's more like, 4 or 5 or what have you. So, if you don't have access to that sort of information as well, it's difficult for your generalist investor to follow and make that call. It's impossible, quite frankly, because it's.
A couple of caveats there. A couple of caveats. Okay, so I sort of made a statement about 2-3 years ago when people talk about, I think, conversations around, and again, it was the app, the kind of private conversation channel we've got there. People talking about the difference between NPV 5, NPV 8, and NPV 10, and I'm like, I don't care about NPV 5, 8, or 10, because if a company comes into me, I'm going to give them the money, I'm going to give them the equity. I'll apply an NPV 40 on this thing. I need to know in the worst possible case, worst possible scenario, this thing can stack up, right? So when I've got people like TD or any of those guys, I don't want to, pick on TD. They all do it. They cover these companies on the basis that the company's going to raise some money in the future and they want a piece of that pie, right? So again, incentivized to write nice things, right? So that's one. Two, the people who are writing these things, I would say 9 out of 10 are not qualified to, just not qualified. I remember when I was a young analyst and having to write these things up, I was not qualified to do that. And everyone I've met since then, or not everyone, 9 out of 10 people I've met since then are in the same position. There are some great guys who really get into the detail, irrespective of whether they're incentivized to or not. They understand it. They know what they're talking about. They've worked in the industry. They've been on the ground and they were good at it. It wasn't a case of those who can't, don't. It was those who can't go into teaching or writing. I can't remember the exact quote, but something like that. So I take those analysts' numbers with a huge amount of skepticism. I take those kind of analyst coverage notes just broadly with a huge degree of skepticism too, because I think you've got to get in and try and do the work. And if you're qualified to do that, you can. Again, if you're not qualified to do that, in the sense of you I don't know what your day job is, but it isn't mining, maybe it's a little bit harder. I appreciate that, but that's why I think you've got to have this kind of like discounted view of whatever you're being told by all companies. And you're talking about next gen there, but there are tens of companies doing the same thing at the moment as well. And this is your money, folks. So genuinely, be negative and you won't be disappointed. Is my approach generally to these things. So I think we're losing sight of the actual question, which is market cap and MPV.
Not really, because
not correlated.
None of the answers here are simple, and they're not going to get handed to you. And some information, I guess, is better than none. Even knowing that somebody who's not qualified sat down and actually ground out numbers and spent some time doing it is better than most people get. And so it depends on the type of investor you are and your risk and how much money you're putting up, et cetera, et cetera. But it's at the end of the day, it's a complicated business and it changes daily. And like I say, it's a project. Yeah. It's a project that's constantly being attacked with risks from all over the place. More so than, I would say than your typical standard business. And you have to be on top of that. I mean, the guys over in Niger, there's a good example. A couple of good projects, things going well, everything's fine. They've got an NPV, everything's good. All of a sudden, the military stands up and starts kicking people out. I mean, who saw that coming?
Well, we did.
Changing.
We wrote about it 3 years ago.
They've done it before. So
It's like, well, it's that whole Sahel region, you know. We've covered it for gold companies, you know, all the companies operating in they say it's easy. It's not easy, because I've got a friend in the services out there. He's in the paratrooper, and they told us about this 5 years ago. He said it is heating up down there. It's got really difficult. I remember a PR agency like calling me up and saying, "You've got to take that article down." I'm like, "What are you talking about?" I said, "You can't write that kind of thing." I said, "With all due respect, go and F yourself. Don't tell me what I can and can't write. You want to take away the truth because it's inconvenient. Well, what about all those investors who might lose their money if this stuff rears its ugly head?" So, and I think that's my point about all of this, is like, you've got so many vested groups, like people with vested interests in this sector, trying to cover up way too many things which will make a company fall over. And in fact, here's an interesting one for you, Chris. If you think about the chance of success from like going out and exploring or staking, exploring, making a discovery, making an economic discovery, moving it through a development phase, and hopefully attempting to get it funded to get into production. How many people go through all of that? Very, very few. I bet I could take globally like 3,000 mining companies from the smallest right the way through, and just randomly go like literally decimate them. Go right 9 out of 10 of these companies just randomly.
And those numbers, those numbers have been pushed for sure.
And I'll get a lot of that right. With no insight, no research, no data, no anything. This sector is difficult. All you can do is go through a process which will increase your likelihood of success. And if that's the case, someone's making a lot of money. But that's why investors, I think, if you look at their portfolio, maybe 20% of their portfolio makes money. Maybe, if you're lucky, more like 10%. The bulk of it, maybe a chunk might stand still, and the rest of you're going to be underwater. So that net, you might be up in the deal, but 98% of retail won't be. So ignoring good data, ignoring the need to do work. I think Rick Rule says if you spend 1 hour per company, per month researching, and if you're not prepared to do that, you go buy yourself an ETF, because you're the wrong type of investor. Anyway, sorry, rant over. Not really. I'll do it again.
Well, I think I've told more people than not, you've got to stop investing in this stuff, because it's dangerous for you.
It's dangerous for some people who can't be bothered, haven't got the time, inclination,
it's not even
willpower.
Have to be bothered. It's a lot more work than just looking at stuff on the side and monitoring your portfolio. A lot of work.
There we go. Well, whoever asked that question, I can't remember who asked it. I think it was. I know who it was. It was Robert Dagg, a regular commentator on YouTube. I think he picked this up, and I think he asked that question. Yeah, there you go. He watches a lot of our videos. He's obviously a smart man. He also asked some pretty good questions and some damning assessments himself, so we like that. Yeah. So I don't know if that was of any help, but it was more sort of, I guess, rant from me and some insight from Chris there, folks. Are we done on that? Are we done on that subject? Should we move on?
So. I think that's enough.
Should we move on? Right.
Please.
Now, just coming back, please. That's depressing. It's not depressing. You can make money, folks. That's the good news. But you got to be smart about it, and you need to work a little bit harder than you do. Right. Another question sent in, which was like, I think someone said, if I was investing in exploration, the 2 companies that I'd go for are ISO Energy with Phil Williams, and ATHA, which is a kind of spin-off from ISO in a way, isn't it? I think. Is that right?
No,
there's certainly some.
Well,
it's part of the. I think it's part of the Phil Williams group of people who all know each other. Right. So lightly. Okay. So go on then. What do you think of both of those companies? Are those the 2 places that you'd invest your money?
If you think you're investing in exploration, you really have to understand again what you're looking at or who you're looking at here. I think Phil's done a fabulous job of collecting up assets during the downtime people had long stopped caring about, hoping for a better day. And that better day has been coming. And as such, they've been able to monetize some of their assets, a lot of their assets. And
they've offloaded Argentina, Chris. Did you see that? Right. They offloaded their Argentinian stuff. So I think which is smart for sure.
I mean, the connection with them and ATHA was ATHA went out and they haven't been around that long. They just went public a year ago, and they had been able to acquire a fairly substantial, like millions of acres of area in and around the basin in Saskatchewan, and raised a lot of money on that and went public, and all is good. They then acquired 92 Energy and Latitude Uranium. Right. And Latitude was a spin-off of Phil's group of companies. Yeah. And so as a result, I think Phil's on their board now. And that actually the asset within Latitude is the one that ATHA is starting to really focus on. But, again, exploration, you've got ISO Energy has a market cap now, I'm not sure, is it $300 to $400 million?
More.
Is it more?
I'll tell you just now, caller. 625.
You're right. It's like 560, something like that. Yeah.
Something like that.
It's a lot of their asset, but a lot of their value is coming from assets that exist right now. So, they acquired a lot of U.S. assets from Energy Fuel, which are now in development. I mean, I think they like to be thought of more as a development company than an exploration company, I guess is my bottom line. And it depends on how you want to define these things. But they're looking to bring those assets in Utah back into production. I think a lot of that still has to do with the price of uranium. We looked actually at those assets back when they were up for grabs. And I mean, for us, it didn't make sense, but Consolidated Uranium, or Phil's company at the time, picked that up and got quite a strategic relationship with Energy Fuels and in bringing those assets back online. So that's a big part of their value and their story, is what they're bringing online there. And then, of course, the Hurricane deposit that they have in Saskatchewan is the world's highest grade deposit. But again, there's another interesting story going on there, in that it rests right on a claim line with our friends Cameco and Orano, and who have been drilling like fiends on the other side of that line, and it's starting to look like they may have even more on their side. So that there's going to be some sort of transaction transpiring out of that at some point in time, and whether ISO picks it up or whether Cameco and Orano pick it up, and whatever your viewpoint is on that, that's going to be their upside. So they do have a lot of exploration projects and property, but that's not where the value right now is coming from in terms of their market cap. And so, is it exploration? Is it development? They're in a different part of that curve, right? Your Lassonde curve, if you will, in that they've got resources, and those are the resources that they're now moving into that next phase of life.
Yeah, no, I kind of like Phil's business model there. And in fact, I interviewed him along with Mark Chalmers last week, just about, well, how did you two get together? And I think it was Mark had used Phil back in the day, 15 years ago, to raise some money for one of his projects. So it was like, knew each other for a while. And, I think it does a job for Phil in the sense that he gets to take we're in production, development production, rather than exploration, and access to White Mesa Mill, which is, again, quite useful because I think it's the only company that Mark's got to deal with at the moment. And that's a tolling agreement, because I think Mark certainly been indicating to the market that he's going to do a buying schedule, which is basically, tolling it through here. If you want to sell your ore, I'll buy it. I'll take 50% of the value of that. And so I'll take all of the value of that, but you obviously won't be paying it. We won't be buying it at spot price, which I think so. I've seen shareholders look at uranium companies and go, we're gonna toll through White Mesa Mill. No, you're not. to if you allocate spot price today, that gives us a margin of X. It's like, no, it doesn't. And you kind of end up with these kind of quite bizarre spreadsheets working out the value of their company, which is nothing like what they think it is. And, the less margin you get for your ore, it has a disproportionate effect on your bottom line. So it's...
Yeah, and we've known a number of people who have looked at entering into those agreements with White Mesa, and it doesn't happen. It's not going to happen. It ain't there for cheap, for sure. Yeah. And I think a lot of companies who are operating down there have realized that if they are actually going to be mining in the area, they're going to have to be able to support the building of their own processing facility.
Yeah, and then that changes everything, because that's a whole bunch of money up front. That's a whole bunch of expensive money up front, even if you could get it.
And time.
Which again changes your return profile. Yeah. So it's a very interesting space, shall we say?
And I think it's happening in Saskatchewan as well. So the minute somebody starts nonchalantly saying, "Well, there's infrastructure here, and we'll just send our ore over there to be processed and what have you," show me. That doesn't happen. It doesn't happen.
Yeah,
people aren't sitting on processing mills with excess capacity that they want to give away.
Yeah, there's that old cliche, isn't it? He who controls the mill controls the district, right?
Yeah,
that's been around for, I don't know, 100 years. It's still true today. So anyway, so coming back to it, I think Arthur, again, they're sitting on a big land package. I haven't spoken to them recently, but I know the biz dev guy I'm just gone there. I'm going to try and catch up later this week. But it seems to be that they're going to have to come up with they're going to. A big land package to me is a big liability, because you're going to spend money on it. So you've got to come up with a model which kind of works for you. Either you raise some money and you focus in the stuff that you want to, like as you think about this, or you have to bring in a strategic partner, or
either way. You almost have to you have to chunk up ATHA, right? Because they're going in a couple of different directions. But they came out of the gate with we've got.
I love that. There's a headline. Getting chunky.
I don't think you'll see it on one of their press releases, but yeah.
No, shame.
They came out of the gate with 8.5 million acres of Athabasca property. That, was again, it's all early stage. This is all stuff that nobody else ever picked up. It was all available for staking at some point. So there's a reason for that. I mean, it's a crowded space out there. And the best neighborhoods are already occupied. But what it means, it doesn't mean that there's nothing there. It just means that you're now starting at a very early stage of exploration. And to your point, it's a bit of a liability, because you got to do a lot of work to boil 8.5 million acres of property down to defined targets. So they have spent, I think at the time, we did the calculation, they have to spend $15 million a year just to hold the property. So they have to put that kind of work into them. And there's different, if you do different types of work, you get different credit and whatnot. But the first thing they had to do was fly that entire package. We couldn't find geophysical survey companies to do work for us last year, because every one of them had been grabbed up by ATHA. And that's, we've talked about this before. That's now you're early in the process, right? And you're starting to eliminate areas that aren't prospective. You're focusing down, focusing in. And so from an exploration standpoint, and that continuum, if you will, that property is at the earliest stages. And that was their problem coming out of the gate, because they were probably going to be a couple of years before they could get to the point where they could drill anything. And that obviously has an issue from a news standpoint. And they have, not just working it all themselves, but certainly they'd want to auction off as much as they could and get other partners working that as well. So that was just how they came out of the gate. I think when they acquired, to kind of fix that problem, they've done two things. They picked up 92 Energy, who was working their Gemini project down there. And 92 was out of Australia. And they had a project that they could start drilling tomorrow. So it it allowed them to get into that news flow game where now we're drilling something. So give us that. And that's kind of your second chunk. And then the third chunk was Latitude, which they picked up, which again was one of Phil's spinouts. And they had projects in Labrador, but they also had the Kivalliq property up in Nunavut, Canada. And so that seems to be a big part of their story right now. They've put, I think there's about 45 million pounds up there, but it's at like 0.7%.
That's right.
I know back when Kivalliq was holding that back in the last go around, they were trying to figure out how to put all that into production, which, in hindsight, to a lot of people was a bit of a mistake because it wasn't big enough. And it wasn't like the expenses up there to cost 3 times as much to do anything up in that part of the world as anywhere else. Hath's approach is certainly to now expand on the resource. So they're not trying to drag this thing into production tomorrow. They're going to expand it. Now, it looks like they're having very good success doing that. So, again, you have to do the work. You have to look at what it is you're investing in. What do you to blindly call them an exploration company? They're doing a bunch of different things, but where's the value and what are you following and what's going to keep them afloat? A lot of their underlying objective is to make sure that they have a market cap and a share price that keeps them in the game, because that's a limiting factor to a lot of the companies, us included, but that continuing to be able to raise money, keep in the public eye,
there you go,
keep on the radar, etc., that kind of thing.
Yeah, I was literally going to say that. What I kind of like about the ISO Energy guys and that team they've got there is their ability to tap the market up, because I think they're telling a story. They're managing that story and articulating their story quite well, which is giving them access to, I guess, their buddies, because they're all finance bros. Is that what they say? They're finance guys. They know each other and trust each other to be able to engineer something here. Because sometimes this isn't necessarily, because I'm doing I'm basically flipping out a copper asset which I've got in Chile. I've been funding it for the last couple of years, and had loads of approaches from the great and the not so great of Canada, where funny is that when it comes down to it, you really, if you don't know who's who at the zoo, and you don't know the games they play, you don't know about the rules which they play, you could literally get absolutely beaten up, shall we say, polite phrase. And it kind of, we ended up not going with the kind of biggest bid on the table. I say me. I didn't go for the biggest bid on the table, which is 4 times the next guy, because I knew what the team were like, and I knew that they could raise money, but that's all they could do, right? So they got one leg of the stool, brilliant, but what they couldn't do was, they couldn't deliver it technically. I don't think that they were very good at the marketing to the market, not the raising money bit. And I knew that all made each other a lot of money, but not necessarily the shareholders. So it was kind of, when you start analyzing it, and in a way that, as a meaningful investor, a shareholder of that company, or potentially a big shareholder of that company, you suddenly go, it's my money, and I don't want these douchebags to just run riot, in terms of salaries, consultancy fees, options, bonuses, all sorts of ways of monetizing the heck out of this thing, and not drive that share price, which is the thing that you said. You've got.
And I think you're right. You're right there, and certainly in the case of ISO, right? If you really take the time to look behind the scenes as to who we're talking about there, you see that connection. I mean, Phil. Well, I've known Phil for nearly 20 years. I mean, he was with Mega Uranium originally back in the day.
Yep.
And that's his connection there. And Mega Uranium has always been part of this clique, if you will, all along. But ISO Energy was rolled out of NextGen. Liaison was part of the startup of Consolidated Uranium. Now sits on the board of ISO. So that when you look at the pattern of the people behind it, they're definitely have got the connections, the wherewithal, the understanding to, not just play with the money and not just work on one leg of the stool, but really build a compelling business, if you will.
Yeah. No, I like that. I like this version of it. I think when I spoke to Phil maybe two and a half years ago, and he reminds me of it. I gave him a proper grilling about the quality of what was sitting in the portfolio, because he had, got the Australian assets. Australia looks so far away, probably still does a bit, from ever allowing people to, mine there. You got Argentinian assets, so like good luck with Argentina, and a bunch of land, and that was it. What he has crafted and engineered since then has been impressive. Some of it obviously fortuitously, because Hurricane had not been discovered at that point. You've got, I guess, a kind of series of transactions that have also added value, and they've got the kind of money into the current format when they needed it. So I think it's kind of come together really, really well for them. In terms of someone saying, well, if you're going to go exploration, I'd go with, everyone's got an opinion. These are just two of the companies mentioned by one individual. But what are you thinking about the balance at the moment between the M&A happening and the number of new cos coming through, or picking up either good assets, forgotten assets, crappy assets, and that kind of white noise? Because my view is that with too many companies comes too much distraction, and people are not allocating money to good companies. They're just allocating them to broadly because there's a bit of noise around something. We see lots of companies throw ridiculous amounts of money on some crazy video. It's one company we're dealing with, 10 million market cap, raised $2 million, spent 400,000 of that on some video campaign from some US marketing. It should be illegal because it's moronic. It's all AI. You could do it in 10 minutes. This company paid 400 grand for it. Stock went up for 2 months, back down lower than it started after 2 months. And I've seen that several times, not just Uranium, but several times. What the bloody hell are these guys thinking?
Mm-hmm.
Sorry, ranting again.
No, I think what we're seeing. But the new companies coming in. And I think we've hit all these points. They don't know anybody, right? They're new to the space. They're new to the geology. They're new to the projects. It's all new, early, and that's not how we find stuff. I mean, if you're looking at exploration, there's enough exploration companies out there that have demonstrated that they have that they're probably, the odds are better that they're going to find something than somebody else. And one of the concerns that that we've all had is we see this frothiness coming in and everybody grabbing up property and investors and money coming in, is that it's money that's not available to the rest of us. There's a lot of money probably being wasted, tens if not hundreds of millions of dollars, just to make a splash around a uranium play that's not going to last more than a year or two. So that's problematic for the likes of us. But I think in terms of exploration, I think investors really need to, if they want to play the game, they want to get involved. There's a lot of upside, but they have to really understand who they're betting on, because it could be anybody. And I mean, you've just brought up umpteen examples of how things go wrong, even when they're not supposed to look like they're going wrong. And in junior mining, junior exploration, that's where we can find the worst of the worst. So you got to spend some time, spread it around a bit. But again, the upside's there, and and the likes of us, we're all going to continue to find more stuff because there's lots more out there to be found. But it won't be by the new guy on the block who's got a new thought.
Yeah. In some ways, I sometimes think those guys don't even care. So as they keep raising money, it's all good. Pays for the beach house. Right. Let's get on to something useful. I saw folks for listening in or watching or have you're interacting with us. Bit ranty in places, but it's so frustrating when I see all these companies fleecing retail shareholders out of their money by saying stuff they know is not true, by pushing stories they know they should, drill to kill or, just terminate now. But they're not incentivized to do that. And neither is the litany of people sucking money out of the company. They're not incentivized either to tell you the truth, but everyone knows. Right. I promise I'm stopped now. Let's talk about India, right? Now, I've done a lot of business in India, and it can be a strange place. Actually, talk about the good and the bad. Wonderful, beautiful country, beautiful people, great food, and just big, absolutely big. I was involved personally with their the tech space down there. Some brilliantly smart individuals, and you have done some work there too, I think.
We were there. I was over during the last real run in uranium, because what we saw was a lot of activity out of the infrastructure companies over there. I mean, Canada and India had quite a nuclear relationship back in the day, developing the CANDU reactor and developing new reactors, and pretty much leading the world in that sort of technology. It all kind of fell apart when they wouldn't sign the Nuclear Non-Proliferation Treaty. And I think at some point we put a reactor into an educational reactor into one of their universities, and they took the plutonium out of it and tested a bomb with it. And that got us into a lot of trouble as well. But so there's been a real division over decades and decades between Canada and India, but there was an original relationship there that was quite strong. What we saw back in 2000.
Do you know how many reactors they've got? Do you know how many reactors they've got today? 22.
India? It's 22.
Yeah.
So what you say? And you know what? And I think if you look at them, they're all the old Canadian design, or a spawn off of that, because of course nobody was allowed to work with them for decades on the development of it. And for the longest time, India went down that path of thorium. So that was their big strategy, because India doesn't have a lot of uranium, but they've got tons of thorium. The problem, of course, nobody had yet created a working thorium reactor, but that was their strategy. Country strategy was there was a three-pronged sort of approach to developing uranium reactors and then moving them along to become thorium reactors, but that kind of went nowhere. Anyway, point being is that what we saw was the GMR Energies of the world and Reliance and Tata, and these massive infrastructure companies, were actually putting together internal organizations that were, again, huge. They were finding all their old experts in nuclear, in uranium, in what have you, and before they were allowed to, they were making the investment to just get themselves ready for this next big push. And so we went over. We were talking to them quite regularly. They wanted to understand how they could get involved in exploration or into uranium over here, and they were sitting on some amazing people and expertise in the area. They wanted desperately to get into the nuclear reactor business because they were already building power stations all over India and hydro or gas or what have you, and airports and highways and huge projects. And they certainly definitely wanted to get behind nuclear, and the government wouldn't allow that. It wasn't there. The NIPCL or whatever it's called, the India's Nuclear Power Corporation, the government run.
Yeah,
they were the only ones that were allowed to actually build and run a reactor. So we know that they were really chomping at the bit to get into it. So I guess last week, the Indian government is now allowing the private sector to get more into that business. I think it is somewhat limited at this point. It's just SMRs and some R&D, but it's the crack. And I think we're going to see a lot coming out of India because of that. I think you're going to see these a massive amount of capital get thrown into this as an opportunity for them, and I think big enough to the point where we could see things shift a bit.
Well, no, absolutely. Well, one is that, let's remember the population there. We're at 1.2 billion people. So it's 22, possibly 23 reactors existing at the moment. Another 10 under construction at the moment. So there's definitely the will is there for sure, and it's kind of interesting in terms of the way that India has been sort of sidling up to Russia in terms of the oil, and I suspect we'll be sidling up with regards to the enriched uranium, etc., to feed their needs down there. So that's an interesting time. So they've basically had nuclear reactors since I think 1965. It was commissioned, wasn't it?
For sure,
something like that. Was it Rajasthan, somewhere like that? So they're a long-standing nuclear energy user. For sure. This is not a new development. Like when we see every week, and I know you do a great podcast, reviewing the kind of news as to what's happening out there, in terms of different countries new to this space, jumping aboard. But these guys have been at it for a while.
Yeah. And they've been at it in isolation, which is interesting too, because again, the rest of the working world has not been literally allowed to provide them with any input, information, equipment, thoughts, anything, until recently. So it's, I think it's something that's ready to really explode. Don't want to say explode, but
no, you can't. You can't say a tidal wave of interest either. We'll get absolutely abused. There's so many words we're not let. I think I kind of referenced the. No, I know. I think in an article I mistakenly, bad choice of words, referenced the fact that nuclear weaponry, etc. In a story about nuclear energy, it's like I got a lot of inbound on that one. very sensitive, very sensitive on the topic. Yeah. Anyway, I backed down immediately, as I do. Well,
we were talking earlier about catalysts. I mean, that could be a catalyst because a lot of the SMR stuff has not been taken into account. When we start looking at all those supply-demand curves, that stuff has not been taken into account. And I think there's a lot more effort and energy being put into that sector right now than people realize, and which could come looking for uranium fuel sooner than the things we talk about that are under construction. And because it requires a different type of fuel. And that's another thing that the Indian government is allowing the private sector to work on as well, is the fuel conversion.
Well, why don't we see if we can rustle up some data on SMRs in terms, because there's lots of, it's kind of like VHS versus Betamax, isn't it? It's like which technology is going to get to market first for SMRs. My vote is obviously with Rolls-Royce. Got to stick with the home team. See what they do. But I imagine the Chinese and the Russians have got a few thoughts on that one. And funnily enough, I think they do, because they're getting a lot of support, because they do the entire package, in terms of that kind of funding for some of these smaller countries who perhaps can't afford even an SMR. They'll go, don't worry, we can amortize this over, it's like buying a car. We can amortize this over 5 years.
Well, they got the nano reactors now too, or the micro reactors. You drive around with the truck.
Yeah.
Yeah. We know a few of those folks too.
Oh, let's do a little session on that at some point. Okay. I need to do a bunch of research and get my boys to. Have you?
Yeah.
Oh, let's do it. Let's show pictures. Everyone loves boys' toys.
Yeah.
A nano truck.
A nano. Well, there is this company called Nano.
A nano truck.
It's public now. And they're focusing on the micro reactors. So they're essentially, you will move them around with a transport truck and plant them where they need to be. And it's
inside a data center, by the sounds of it, seems to be the next catalyst. Driving interest. But you know what? It's a funny thing. We'll definitely do one on that as well. We'll talk about the data centers as well. So people should throw that in casually, like it's going to fix everything. I think it's, for me, more about the kind of people who want that kind of derivative type investing. Okay, I'm invested in this technology company which has massive AI data center requirements. Derivative is let's secure the energy needs for them. I think there's something there. I've heard of it. I haven't really heard a good argument about it. It's just like a sort of vague hope that that's what's going to happen. Maybe if we'll dig into it a bit more.
Sure.
See if we can come up with something. Yeah.
Mm-hmm.
For that.
Mm-hmm.
I'm ready. Alrighty. Right. I think with that, you better go and actually join the rest of the family on this what is this? Is a bank holiday you're in Canada?
No, it's a nothing holiday. It's our August 1st weekend holiday. So it doesn't even have a name. We celebrate no one in particular, nothing. We just
really
the first weekend of every month in the summer we need an excuse to take it off. So we take off July 1st and August 1st and then Labor Day in September.
National Martini Day? Could we make that a thing?
I think we can name it whatever we like.
We could try. It's national. Okay, well, it's been really good having you here, joining us. Thank you very much on National Martini Day.
Thank you.
We'll see you next week.
Okay. We won't see you next week. I think.
I'm on a boat.
You're on a boat somewhere.
We're off for a week. I'm on a big boat. Oh, man. I'll send you pictures. It's the beautiful Croatian coastline. Going to all of the places where they filmed not House of Dragons, what's the other one? The prequel. They
Game of Thrones?
Game of Thrones. Yeah, I'm gonna go stop at a bunch of Game of Thrones places. For I've got 18 of my relatives.
Yeah.
Everyone needs a dragon in their life, right? We've got 18 of my relatives, which is a recipe for disaster. And we've hired a boat to sail up and down the coastline. It'll be dark though, as well in places. And the best bit about this boat is one, you've got 3 levels, so we can rotate around the boat and avoid people who we don't want to speak to. That happens a lot. So if you see them coming down one side of the boat, you jump to the other. It's good. The stairs are a problem for some of the older ones. So upstairs is usually a good spot. We can trap them on a level, and the only difficulty is there's a bar which opens at 9 a.m. in the morning and switches off at midnight, fully manned for those hours. That's the only thing I think that's going to get me through this joyous event.
Oh, come on. It sounds spectacular.
There we go.
Sounds like a good week. Come on, man.
It's gonna be great. It's gonna be great. The good news is there's a lot of crew who can pamper us. Hopefully, have a week off. Commiserate with. Right. Enough of that. Okay. I'll more of that when we get back. Chris, as always, brilliant, insightful. I do appreciate your vast history in the Saskatchewan and uranium space. We'll see you soon.
Okay.